I think the market is moving towards the end of the year with more optimism.
Okay.
Not only the Politburo comments yesterday, I think that helped, but also I think the overall tone of the government's policy over the next 3 to 6 months continues to be ongoing support for the economy.
大家好啊，今天是2024年的12月11号，最新的中央政治局会议不也开了吗？里面提到了什么更加积极的财政政策和适度宽松的货币政策，也令市场备受鼓舞啊。因为适度宽松这4个字，上一次出现还是08年危机之后提出的这个4万亿。那我们看一下摩根大通的这个首席策略师他是如何解读的。
Morgan Asset Management APAC Chief Market Strategist. Why don't we start with that question? Near-term impact.
I think the market is moving towards the end of the year with more optimism.
Okay.
Not only the Politburo comments yesterday, I think that helped, but also I think the overall tone of the government's policy over the next 3 to 6 months continues to be ongoing support for the economy. Now, we've had that since late September, and frankly, we're still waiting for a lot more of the details. But I think the fact is, when you're looking at the global environment, it's getting more uncertain, getting a bit more volatile. The fact that the Chinese equity market is still quite attractively valued, I think that does help to attract some investors to come back in.
But again, do you see it as sort of a near-term story, or are you actually thinking if you've got a longer-term horizon that there's enough to bring you back in
I think
right
most
now?
people would still see this as almost a tactical opportunity. So more shorter term, really waiting for the stimulus to come around, and also the rotation potential within the markets. Because if you look at the last year and a half, almost 2 years, there's high dividend stocks, banks, telecommunications, the safe and dull stuff, the state-owned companies. And then since end of September, you've actually had the IT, the semiconductor sector that really outperformed. So I think if we get more support for the economy, if you get a bit more consumer spending going, you may see more of the rotation into the internet stocks, into the consumer stocks, which frankly have underperformed for the past few years.
There's always a risk anyway, but a policy vacuum, if you look at the calendar, right? So we had the Central Economic Work Conference, and then probably the next big event will be the 2 meetings. And I'm wondering, do we find ourselves likely in a very tight range between this week and then? What would be the next catalyst that could unlock this between those 2 major events?
I think, obviously, from China's perspective, the policy outlook will be driven by the Central Economic Work Committee and also the National People's Congress in March. But don't forget the external factors. President-elect Trump will be inaugurated on Jan 20th. How does what's his first couple of weeks look like when it comes to trade? I think that will also influence the Chinese market. Don't forget, if you look at whether it's CSI 300 or MSCI China, domestic demand still makes up a significant share of that revenue stream. So you can argue that trade is more of an indirect impact on consumer sentiment, on business sentiment in China, but I think that still matters. So if you get a slightly more friendly tone from President-elect Trump like we did earlier this week, then maybe the market will find a sign of relief. But at the same time, I think you've seen in the last few weeks also that the underlying the battle on export restrictions, on export bans, those will continue to play a role in the Chinese economy.
Right. And do you suspect, back to your earlier point, state-owned plays, income dividends, do you think that remains a popular trade? And, we're looking at this massive rally in the bond market. Does this actually make CGBs a lot more attractive than the equity complexes, counterintuitively?
I think the challenge with CGB is that the yield's so low now.
Right.
For an average investor.
But they've done so well, though.
They've done very well.
Yeah.
But then the question becomes how much further can it go?
Right.
Because ultimately there is still I think from an earlier segment I've heard you talk about the renminbi exchange rates. The rate differential between the US and China, that still matters.
Okay.
So I do think that the PBOC would allow bond yields to fall a bit further with more monetary easing, but that scope is becoming narrower. So again, from a Chinese investor perspective, I'm not getting I'm getting less than 2% on government bond yields. I could get a little bit more from high dividend stocks. And meanwhile, there could be a better prospects on the broader economy. So I suspect there could be more of a rotation towards equities, even from a Chinese domestic investor perspective.
Well, actually, we're just showing there what the Hang Seng's doing in pre-market, and it's up more than 3%.
Wow. Okay.
I'm interested because we've had this before. We've had sort of stimulus announcements. We've seen the euphoria. Yeah. It's given up. And how long do you think this lasts this time around? And how much more do you think policymakers need to spell out the details before people actually listen for longer, I guess?
I think if you look back to the experience of late September, I think the market have weeks of patience until you get more details coming through. And frankly, I'm not expecting a lot of quantitative details from the Economic Work Committee this week. But between now and the end of the year, and perhaps rolling into Lunar New Year, you may see more policy announcements in terms of what to do with the support of the property sector, how they beef up local government spending. So I think that, again, to me, is going to be the important gauges, whether this rally can be sustained. Because if you look back to the local government debt swap announced a few weeks ago or in early November, that, to me, was to at least fix a leaking bucket. Because if local government spending is still leaked away, or additional resource being leaked away from this hidden debt, frankly, additional resources is not going to be particularly helpful to boost the economy. At least they patch up some of the leaks, and that allows for additional resources to flow into the right places. For example, maybe consumer spending, maybe allowing local governments to purchase more of the inventory from the property market.
Is the risk to these Chinese markets domestic, or is it external?
I would think it's largely domestic. I know there's a lot of noise coming from the US on tariffs, on trade policies, on geopolitics, but at the end of the day, you guys mentioned earlier, it's about the property market and consumer spending. And frankly, these areas have been relatively weak for the past 3 years since the COVID pandemic. So I think from that end, again, how consistent and how forceful these stimulus are going to be to support the economy to really resuscitate consumption. That, to me, is the absolute key. So it needs to be both addressing the property market issues, but alongside with the labor market issues, which, again, as we've seen in the past couple of years, job growth has been slow, income growth has been slow. We have seen Chinese consumers save up more, so there is a potential pent-up demand, but they need to feel more confident before they can spend. So, we mentioned this a couple of times before, where the central bank can cut rates, can cut triple Rs, but if businesses and consumers don't feel that level of confidence, that lending growth is not going to re-accelerate.
Yeah, we've seen really weak corporate and household credit demand. Then if you're not really seeing this as sort of a long-term story, because it's the problems in China's economy are long-term problems and they require long-term solutions, where are you looking then outside? I
think for this go from a tactical to a more strategic long-term investment recommendation, we have to take one step at a time. And it's, again, coming back to whether the government can actually engineer a more sustained recovery in the Chinese economy. Because we've had these rebounds before, and quite often we don't get the economic data to match the expectation, and that's where the momentum fizzled out. So, again, I think the hope right now, whether it's coming from the end of September or what happened or the announcement yesterday, is whether we will see more consistent, more aggressive policies to support the economy. And again, if the data coming in after the Lunar New Year in March start to show that the economy is starting to bottom out, you could argue that more investors will see this as a longer-term opportunity rather than just a short-term trade ideas from a Chinese equity perspective.
Could it re-accelerate inflation around the world?
I don't think so at this point in time, because ultimately the spare capacity in China continues to be quite significant. And yes, Chinese consumers may spend more, but I don't think this is going to be the V-shaped rebound that we saw, for example, at the end of the pandemic. So I think from an inflation perspective, frankly, China needs a bit more inflation at this point, but I don't see that turning into a problem that could challenge the central bank's policy stance anytime soon.
Okay.
What about inflation then in the US from Trump's policies? Are you seeing that as a risk?
That is a risk because a number of policies that he's been advocating, whether it's in trade, in immigration, in fiscal spending, all of that has an inflation bias. But again, the question is, how are these policies going to be executed, for example, on tariffs? Obviously, if you lump everything in one go, the economy, both in the U.S. and the broader supply chain, they won't be able to digest a 60% tariff on all Chinese exports. But if these were implemented in phases, I do think that the economy and the supply chain will be able to absorb some of that before that being passed on to U.S. consumers. And don't forget, the fact that the U.S. CPI index, a significant share is in housing, in services, these will be more resilient against the tariff and plans. But of course, when it comes to things like immigration, could we see some deportation of undocumented workers? That could potentially heat up the job market again. So I think a lot of that is what you would expect to see in actual implementation, and so far we think is still going to be manageable. But it does make the Fed arguably going to be a little bit more hesitant on cutting rates in 2025.
Which might be a good thing, because I think markets have run with the idea that the economy is doing well, even if the Fed doesn't need to cut interest rates. Why even bother looking anywhere else if U.S. equities keep doing what they've been doing?
No, I do think that the U.S. is a very attractive market still at this point in time.
Okay.
Especially as you rightly mentioned, we're expecting a soft landing in the U.S. economy and the Fed cuts. This combination historically has been really great for equities, including the U.S. I think the area where we get some pushback will be on the valuations on especially the technology sector. They've done really well in the past couple of years. We think that the growth cycle is likely to be extended, and that to me could argue for a broader range of strong performance from cyclical sectors like consumers, like industrials, even in financials.
If tech is doing well, though, do you want to look into areas like Taiwan, for instance, or even Japan, where tech is cheaper?
Yes. So for Asia in 2025, I think the core allocation will still be more towards technology. Taiwan is a great example. We think the AI boom, you can argue that's been very much driven by data centers because a lot of the AI developers are buying those spaces. But you can argue also that a lot of non-tech sectors, financials, healthcare, consumer services, they're also investing in AI. So the ongoing demand for semiconductors supporting those calculations and large language model, they'll continue to thrive. Japan also is a great example, and also on top of that, the ongoing corporate governance improvements in Japan, that's also a very important theme. The other question would be on supply chains. Could we see more diversification into Southeast Asia, into India? I think those could also be long-term investment themes, as we look for ongoing supply chain shifts around the world.
Korea seems to be missing from everything you just mentioned there, because you could replace everything else with Korea. Value Up program, technology. I know they're not the same thing as Taiwan, but do you buy this Korea dip?
I think the challenge with Korea is a couple of things. The Value Up program is just started. And therefore, if you look at Japan, the whole governance improvement, really, the program started back in 2012. So it's going to be a multi-year progress to get to a point where investors appreciate what companies are doing. And also, if you look at Korean companies, their return on equities tends to be relatively low compared to the rest of Asia. So we really need more evidence that's moving in the right direction before investors will look into Korea with more conviction. And of course, the more recent political uncertainties in Korea could also be forcing investors to be more hesitant on the Korean market.
All right, Tai Hui, thanks so much for your time this morning. That was Tai Hui, their APAC Chief Market Strategist at JP Morgan.
看完他的分享呢，总结下来就有几点吧。第一呢，政策很好啊，想象空间很大。第二呢，我们等待具体的政策出台。第三呢，现在外面干扰的因素很多，但核心还是要搞好自己内部的事情。简单来说呢，也就是稳住房地产和刺激消费。其实中国和美国现在不是在竞争嘛？如果想把对方搞下去的话，不在于说，让对方打败对方，你把自己内部的事情搞好了，等待对方自己露出破绽就行了。还有第四点呢，就是还是让老百姓有消费啊，就是让老百姓有消费的信心吧，因为之前存了很多的钱。第五点呢，就是目前呢，他们还是以短期思维看待投资中国的资产。好，这次的分享呢就到这里，谢谢大家。